Good morning, good afternoon, everyone. My name is Pamela Okutoim. I'm a content and storytelling coordinator at Kua Ventures. Also a climate activist, and I have a magazine that is called the Eco Mindset. And I hold conversations about young people, business, and climate change. And today I'm pleased to be your moderator. And I hope we'll have an interactive session, enjoy the session and learn as much as you can. So onto the program of today. I have two sessions lined up for you. It's a panel discussion. Will comprise of two panelists. And the second session, the first session will start at, is starting in the next 5 minutes. And the next session will start at 12 noon. So allow me to introduce my first panelist. So I'll start with Peter Fry. Peter Fry is the co-founder and executive director of Kua Ventures. He'll probably be telling us what Kua Ventures is and what Kua Ventures does. He specialized in investing for impact and early stage businesses. And to date, he has worked with Kua Ventures to see 15 businesses in the portfolio. And these 15 businesses have benefited from funding from Kua Ventures. And also he has reviewed over 500 businesses across Kenya. So he's really well versed in the area of business and impact investing. Peter brings a diverse set of experiences, having lived and worked in Ireland, Hong Kong, United States, and currently in Kenya. Peter holds an MBA from the University of Manchester, certificate in fundraising from New York University. So guys, you're in good hands. Trust me on that. Welcome, Peter Fry. Happy to have you on this panel. My second panelist will be Misere Miano, who is an investment officer at Kua Ventures. Misere Miano has worked with Kua Ventures since its inception in Kenya, which is really amazing. She works as an investment officer and foresees the pipeline engagements with hardworking East African entrepreneurs, even before they join Kua Ventures portfolio. So she works with prospective investees in the initial stages, that is in the screening of their businesses, and also just understanding the Kua Ventures criteria, values, and the missions. Misere also holds a master's degree in international relations from Daystar and a bachelor's degree from the United States of University of Africa, USIU. So she's going to give us a depth of African political and economic landscape, how this relates to our businesses. She's also committed to ensuring that small and growing businesses in Kenya receive support to scale their work and impact to contribute to the social economic development of the country. So welcome, Ms. Sere. Your expertise in this area is such diverse, and we hope to learn just as much as you can. She's also very passionate about entrepreneurship and creating positive impact in her community. So those are my two panelists, and guys, you can agree with me that indeed we are in good hands. Welcome, panelists. So Peter and Misere.
Pamela, we're here. We can see you.
Yeah.
Thank you. And just so I have a few questions that are lined up for Peter and Misere, but also the floor is open to the audience to ask them questions from in the chat room. Just direct your questions to them in the chat room and we'll be able to have them answered. So feel free to use the chat room at any point during this session. And here we go. Peter, I'll start with you.
Please.
As the co-founder of Kua Ventures, first we need to understand who is hosting us and who are you. So kindly just, the floor is yours. Tell us who Kua Ventures is. Welcome.
Thanks, Pamela, and welcome everyone. Karibuni sana. It's good to be here and excited to spend this next hour or so with everyone. But thanks for making available, Benson, Gibson. Thanks for being available as well. So to give you guys a bit of a understanding of who Kua Ventures are, like, if this is your first time interacting with us, if you've recently applied, or whether you've been on this journey with us the last couple of years. So we've been an impact investor for the last 37 years in 37 different nations. But we founded Kua Ventures around 3 years ago. And so that's when we started our operations here in Nairobi. And that's where we've kind of, established our headquarters and we're building out our team. But to get to know a little bit about who we are, what motivates us, and kind of why we exist. And so back to our founding, we fundamentally, what are we trying to accomplish? We believe that God created each human with skills and abilities and to work and to create. And so for us, we believe work is more than a means to an end, but it's actually where we fulfill our potential. But also we believe that every person in the world should have access to a stable job. And it's just a critical part of creating a flourishing and stable society. And, we believe that entrepreneurs they're like the spark plug that make all of this happen. They're the individuals with the drive and the motivation to create businesses and to solve problems and create solutions. And we believe that people are a key part of actually being able to provide those businesses that do create opportunities, but that help societies and provide jobs for hardworking men and women. And so our vision, what we're trying to accomplish, is we're trying to grow businesses, create jobs that will transform lives. Because we believe that's a critical part of just creating a stable economy that brings prosperity and opportunity. And so that's why for the last 37 years, we've been investing in growing small businesses all around the world. And so that's kind of a little bit of like our motivation of why we exist and what we're trying to accomplish.
Thank you so much, Peter. I think that's really clear. And you talked about investing in small and growing businesses in Kenya. And I think that is the conversation where we're here today. And allow me just to jump to Ms. Sarah, because you recently just launched the call for applications for these small and growing businesses in Kenya. Could you kindly just tell us what this call is all about and how does one get in?
So we just opened our round 4 call for applications on the 2nd of May. So literally as of today, we could say we are 1 month in, and we are open for 2 months. So we'll be closing the call in June 30th, which is next month as from tomorrow. So basically we still have time to keep receiving applications as they come through. And for anyone who would want to apply, they can apply through the website.
Okay, thank you, Ms. Sarah. And you mentioned this is your 4th call for applications. Mm-hmm. So meaning we have done 3 more.
Exactly.
Maybe Peter, you can just tell us what has been the impact of these previous 3 calls for applications in Kenya so far.
Yeah, sure. So let me exactly. So we've got 15 businesses in the portfolio, and that come from, across Kenya. Majority of them are based here in Nairobi, but they have operations around the country. But they range from a variety of different sectors. I know Miseri will kind of expand on that a little bit, but they can, businesses are, there's in healthcare, there's agriculture, the services, some in manufacturing. But a variety of businesses. And I think one of probably the biggest successes we think is that there's 15 businesses that have survived a pandemic, that have survived an election, have survived a drought, and also are surviving a tanking shilling as well. So I think that one aspect that we're extremely proud of these 15 businesses, not only have they been able to grow their revenue, more jobs, but they've also just shown their resilience, right, to be able to survive the challenging environment at the moment. One business to spotlight, is a local film production company called White Rhino Films. And so over the last 15 months, they've successfully been able to execute and produce a Disney and National Geographic local film production. So it was a massive $1.5 million project. And what we were able to do is help them get the equipment so that they can make kind of a world-class production of just showcasing, this beautiful continent and incredible individuals that are working so hard to protect the biodiversity around Africa. And so, but then another part is just even the community. I think one of the areas that we see a huge impact is actually when you bring founders together, and you give them time, fellowship, to get to know each other, a place to be vulnerable and transparent. I think that's one of the things we're really proud of, is actually just being able to kind of help kind of create and facilitate a community where entrepreneurs are able to lean on each other. And just to get counsel, right? To gain and grow in their confidence, but also to find customers. And so over the last 3 years, we've been kind of very much so laser focused in building our organization, but at the same time is being able to help build out the community aspect of what we're working towards, as well as building out the rest of our model. And so, yeah. But one thing I was going to kind of overview is a little bit of like how we operate, so Miseri is going to kind of guide everyone through a little bit like the criteria, the process, what are we looking for, but kind of to explain a little bit about how we work as an investor. And so our operating model has three aspects of what we offer our customers, the small businesses. The first one is capital, and so we're looking for early stage, growth stage businesses across Kenya. And Miseri will expand a little bit on that, but then the other parts are coaching and community. And the coaching is where we try to pair each of the portfolio companies with another entrepreneur. So kind of as a mentor of someone who has charted the path, has been able to successfully grow a business, and navigated that, very challenging journey, especially as a Christian as well. And so we pair for the coaching element, we have a mentor that we pair with each one of the businesses. And then we also have workshops where we gather on a quarterly basis and we bring in an entrepreneur to kind of lead and facilitate a conversation of how they've been able to establish their systems, how they've been able to recruit and build a team, how they've been able to expand across the country. But just trying to create a place where entrepreneurs have access to people who are a couple of steps ahead. And so we can kind of lean in on their experience. And then the third one is the community. And that's kind of the place where we try to facilitate a founder-led network where people can build partnerships, find customers, grow confidence, and all of the other aspects. Because we recognize it's a very lonely journey, and there's a lot of challenges. And so with that, we're just trying to facilitate a place where people can collaborate and work together. So that's our kind of like a 3C model. So, for anyone who's looking to apply, it's just kind of like seeing kind of what do we offer as an investor, and what kind of is, especially to set expectations as well as what are our goals, what are our motivations, but also how do we look to kind of partner with entrepreneurs to achieve our intended vision and mission.
Wow, thank you so much, Peter. And these are good insights even before we go into the application, because we need to understand exactly how Kua Ventures works. And it's good you mentioned that you're offering capital, coaching, and a community. So this is really ideal. And I feel like if you're here in your business, this is such a good community for you to be able to join. How do you get the coaching and how do you join this community? Sarah, just to you, how does one access all the 3C models that have been highlighted by Peter here?
Mm-hmm. So the first stage, if you want to access all 3C's model, is that you apply to us, right? That's where it all starts. We receive all application through our website. So that is kuaventures.org/funding. And you'll be directed to a link where it says apply here. So once you click on that, you'll be directed to a form that you will need to fill. And then that's when now we start the journey with you. So for you to be able to access all these 3 good things, It all starts there by you visiting our website and sending in your application.
Mm.
Okay, thank you. Thank you so much, Ms. Sarah, for that. My next question will be about the funding, the call for applications that Kua Ventures recently launched. What is your funding criteria, really, Ms. Sarah?
Yeah, thank you for that. That's a very, very good question, Pamela. So our funding criteria basically is divided in 3 sections, right? And the first section basically explains what we are looking for in the founder or in the entrepreneur. And then the second section basically explains what we are looking for in the business. And then the last question explains what Kua Ventures have. So as an individual, as a founder, we are looking for someone who is a Christian and is able to lead his business or her business according to Christian principles. And then the other bit is that the founder is driven by creating social impact. Or the other bit, when I talk about the business, what you're looking for in the business is that the business is registered. So for example, if you are a Tanzanian or you're from Uganda, but you live in Kenya and your business is registered here, you qualify for application. And then the other bit is that your business has a 3-year track record with at least 2 years of audited financials. So for example, if you were incorporated in 2019, then that means we would at least want to see audited financials, receive from you audited financials from 2020, 2021, and maybe even 2022. And then the other part is that the business has annual revenue, is making annual revenue of at least 5 million and above. Then the last bit of the funding criteria, when we're talking about what now Kua Ventures has to offer, is that the business is looking for an investment of between 5 million shillings to 15 million shillings. So we could have a business that is probably looking for 100 million. God bless you. But for now, might not be able to afford that 100 million, because our funding ticket is between 5 million shillings to 10 million shillings over a period of 2 to 5 years, which is favorable. And then the last bit of our funding criteria is that the founder is committed to being part of the growing community, which Peter has mentioned is part of the 3 C's: the capital, the coaching, and the community. So you as an entrepreneur, you're willing to get into the Kua Ventures community of like-minded entrepreneurs that are also out there doing great things and working to grow their businesses within the region. So that is our funding.
Thank you so much, Ms. Sarah, for giving us an elaborate feel of the funding criteria and what kind of businesses you're looking to invest into as Kua Ventures. And this takes me to my next question, which I'll be coming to you, Ms. Sarah. You have been able to highlight to us the funding criteria. You've told us how someone can apply, just how we can access the opportunities offered by Kua Ventures. But how much time does this take? What's the process that goes into this? First, once I apply, put in my application, I can see a question that is just coming from someone to get feedback after the application.
Thank you. That's a good question. So once you apply to our website, normally it takes a week. You get a response. First and foremost, you will get an automatic response that acknowledges that we have received your application. And then now from the team, you will receive a very individual email that will communicate that your application was received, and probably would like to have a call with you to get to know you more, or we would like you to share more documents to us. So maybe, Pamela, I can just mention that when you're doing the application, there are specific documents that you will have to upload. So when we are communicating through that email is just to acknowledge first and foremost that we did receive your application, and just to let you know the stage. So probably even that email would include us communicating that your application did qualify, if it does not fit the funding criteria. So let's say, for example, if your business was incorporated in 2022, just last year, part of our funding criteria is that we are looking for businesses that have at least a minimum 3-year track record. So that means that your business wouldn't qualify. So within a week, you're able to get a response that either your business qualifies for the next stage or it doesn't.
Thank you. And I feel a week is fair enough for all of us. So thank you so much, Ms. Sarah. And I can see just more questions coming in on the investment process. What's the investment process like after the 1 week? If I successfully go through I'm successfully chosen as an enterprise, what's the process that I'm looking forward to or I'm expecting?
Okay, so once you apply to us, we normally schedule a call, and your application qualifies. We schedule a call with our Director of Operations, Madalena Santos, who is able to have a call with you just to understand you more as an individual and to understand what the business is all about and what you're doing, and even why you're really seeking funding. Because sometimes even when you're writing down and fill the form, it may never be enough. So just giving you that platform where you're able to express yourself and explain why you're seeking funding and who really you are. And then after that, we normally do a business visit. So in every single stage, we are trying to analyze if the business is still fit for us. So let's say, for example, if Madam has a call and from the beach or from the meeting realizes that there's something amiss, we might end up disqualifying the application at that particular moment. But in a situation where it qualifies for the next phase, is we schedule a business visit, right? So we want to come and see that you actually don't have a briefcase kind of business, that you actually have physical location, and we want to experience what you're doing. We want to meet your team. We'd like to see the operations in your business place, and just now this is where we're starting to create like a relationship, to be able to see that we can actually invest or can actually walk the journey with you to the end. Once the business is aligned after the business visit, is we move it to what we call screening and due diligence. So then we start the screening and the due diligence process. And here now is where we request for more documentation so that we are able to analyze the business further. Not just by word of mouth, because once you apply, once we have a call, once we do the business visit, we are basically just, having discussion when into the screening and due diligence, really just going through. And here is where you even pull in our financial analyst, who's even able to go through your books, for example, have a sit down with you, with your accountant. We are also trying to create that relationship. So as I mentioned before, when you're applying their documents requested for, that would make us make a sound judgment from the very start if the business is aligned. And those documents include CR12 or Certificate of Incorporation. You can submit audited accounts. As I mentioned, that part of our funding criteria is that the business has a 3-year track record with at least 2 years of audited financials. And you can also submit management accounts. So like now in round 4, as you're receiving applications, we are requesting for management accounts from January 2023 to April 2023. And then the other thing that we would like to see are financial projections and the founder's ID, just to know which part of East Africa you come from, and a business plan or a pitch deck or a company profile for us to be able to understand the business from the very start. And then now in the screening and due diligence is where we ask for more documents, compliance certificates from KRA, NSSF, NHIF. We'd like to see a CRB report, documents like a collateral search, business operation like licenses and permits. If you're in medicine, we'd like to see that you're licensed to practice, have permits. The other bit is on collateral identification. We also want to know who are your customers from what you're doing, what kind of customers are you targeting to serve, even who are your suppliers, where do you get raw materials from, depending with how your business is structured, that is. And the other bit is also we'd like to know when you're doing the screening and due diligence phase is if there are other investors, or if, for example, you have you borrowed from other platforms, maybe banks, and probably the other investors who've invested in the business, or you're currently in talks with. So screening and due diligence is where we get to know each other more. It's like we are starting to date and we are kind of trying to understand one another much better. You also understanding Kua Ventures. Like, it's not just us asking you for documents, give us this, give us that, but it's also creating a time where you also get to understand Kua Ventures and get to know us, get to know how we operate, and understand if truly we would be a fit for you at the end of the day. It's not just about the funding. Remember, we are offering the capital, we are offering the coaching, we are offering the community. So it's part of you also to get involved in the due diligence, to know Kua Ventures as investors, are they really fit for me? And for you, even as us, as we're trying to make a sound judgment, you also get to make that sound judgment as well. So it's important for me to also mention that during this time, the screening and due diligence time, is we present the business to our investment committee. So our investment committee will be helping us, in doing the due diligence, and will be helping us in analyzing the business further, because this is a group of people, men and women, who have a great background in business. They are investors, they also own their own business. So they totally understand the struggle 100%. So we are not just presenting the business to people who wouldn't, they really understand what really you're going through as an entrepreneur. These are people who really understand what they're doing and what you are also doing. So they also help us in the due diligence. So we present them to them, we present the business to them. And they're able also to understand who is the founder. They're able also to understand what the business is doing and what the business is trying to achieve, and why they're asking for funding in the first place. So after we do the screening, once we go through the screening and everything seems aligned, we draft a term sheet. Okay, so we draft a term sheet where terms are set down, and we present, and we sit together at a table and we discuss that term sheet. So before you sign the term sheet, is you are also comfortable with it. It's not just us trying to give the rules and regulations about everything. So we present a term sheet to you where you're able to go through it, and we discuss it further if need be. And once the term sheet is signed, then we go into now the due diligence. So the entire process is called screening and due diligence, but it's divided. There's the screening part and there's the due diligence bit of it. So after the term sheet, once the term sheet is signed, we move the business to due diligence. So here we are basically asking for more documents, if there are any that were pending when the business was in the screening phase. So for example, there's a document you were asking for, and probably as a founder or as an entrepreneur, you didn't even know that you need it. Doing the screening and due diligence is that as entrepreneurs end up being more informed, right? They're like, oh, I didn't even know I need to be compliant on this. I didn't know I need to have this. So that is also a good thing, because then you are able to grow, not just in matters of trying to get funding, but you are able also to grow in matters of getting informed, because then we bring in, as I said, we bring in experts like financial analysts who are able to, go through the screening with you. So you get informed on what you need and maybe what you don't have, probably what you're not even compliant with. So with you getting informed and we realize that this business has potential, it's very much aligned. We can sign the term sheet as we wait on you to get this document, maybe it's from the government, right? So that's where now we're in the due diligence stage. So here we're asking for additional documents. Also, we are trying to verify everything that we received when the business was in screening. We're trying to verify the documents that were sent. Also, collateral verification, maybe in terms of if it's a straight debt kind of instrument, and things like that. And also still building the trust and building a relationship with you and with us. So once the due diligence phase is successful, then we draft the agreement. So we draft the agreement, we sit down again, we go through the agreement with you, and when everything is aligned, signatures take place. We sign those agreements, and you know, we move the business into portfolio and really now work with that business in a more intimate way. So this entire process can take from 1 month to 3 months, right? So it's totally dependent on the documents you have based on the structure of the model of the business and the documents that we will need. The process can take as short as a month. It can take as long as 3 months. In a worst case scenario, it can take 5 months.
Okay, thank you, Ms. Sarah. And I think that was long but very elaborate, and we really appreciate that. You've been able to have application process, the screening and the due diligence and everything that goes into there. If there's any collateral that is required, if there's any materials that the business needs to be able to forward to Kua Ventures and also just share. I think that has been really, is that I believe, is it in the application process also, like the kind of documents? Because I can see a question that is just coming in, and someone is, what if I do not have all these collateral at the application that is required at the application stage? Do you have like a grace period, or do you give them like a certain period of time to be able to give those documents, or if you do not give, you're disqualified?
We do have a grace period where we are able to wait on it, right? So as I say, that sometimes it's not even just out of an entrepreneur not really having these documents. Sometimes we've been in a situation where they didn't know. So as I say, the due diligence sometimes informs an entrepreneur. So we have that grace period where we are able to wait on you. So I think it's important for me to mention that one of the things that we really, really appreciate during the screening and due diligence phase is transparency. So if you are able to be very transparent and tell us, you know what, I don't have this document X, but I applied for it and I was told I need to wait for a month before I get it. We will extend that grace and wait for you to get that document, right? And of course, after a month, we'll send an email and try to check in on how far are you with, you know, accessing this document. So there is a grace period. It doesn't mean that from the application, from the day you apply, let's say, for example, you apply tomorrow, and we need all this, you to submit all these documents 100%. There's always time that you get. Yeah.
Thank you so much, Ms. Sarah. And that was really elaborate. And as a business, I'm sure you're starting to think about what kind of collateral do I really have, and what do I need to get before I even apply for this call for application. And here are just snippets that you've gotten from Ms. Sarah that you require before you even start applying about them, before you put it, you need to be clarified on that front. There's one consistent question that has been coming through. Are you funding startups?
Unfortunately, no. We are not funding startups. As if we go back to the funding criteria again, the business has a 3 years track record. So basically, if you're a startup, it's not yet a 3 years track record, right? So if the business is at the startup stage or the concept stage, or maybe it's just an idea that is yet to be implemented, we normally encourage entrepreneurs to, you know, give it time. Maybe go in 2 years into it and then reach back to Kua Ventures. But at the moment, we are not funding.
Thank you for that clarification. For now, just allow me to go to Peter.
And so maybe one thing I'll just expand on, Ms. Ari, thanks for explaining that. I think just for everyone who's watching, exactly, you kind of see the criteria and what are our expectations. We always kind of get some of that feedback of like, wow, that's a big list and there's lots of questions and it takes a long time. And so one thing we just encourage everyone is to make sure that as you're going through your journey and you're assessing what stage you are at as a business, is to look through your needs today, but then also to be preparing for the future. And so I think that's one aspect where we try to be quite transparent with our process of what we're looking for, because we want businesses to be getting these documents ready. And as Ms. Ari said, of just being kind of clear of like, here, I may not have my NHIF clearance certificate, but it's something I'm working towards as I kind of go through my process. And so that's why we just try to kind of lay out what we're looking for as an investor. And so, but it's also kind of, it's very similar to what a lot of institutional investors are looking for as well. And to emphasize on what Ms. Ari said about startups, we're looking for businesses that are at the early stage, but are not at the concept stage. So we are looking for the revenue, and very much so for us. We know every industry is very different in regards to being able to display and show traction that the business has been able to have that proof of concept, and will be able to leverage a funding injection, be able to grow and expand their operations. And so that's the kind of the stage that we are looking at as well, of why we have some of those limitations in regards to what we're looking for. But that's kind of where our niche and our target focus is as an organization. But exactly, and so there's lots of other funders that are at the concept stage and earlier stage, and then some are at the much more growth to scaling stage. But hopefully this is a helpful kind of tool for people to know kind of exactly what we're looking for and what kind of criteria we're looking at.
Okay, thank you. Thank you. I hope as a business insights as well. There's just someone who is asking about, is there an interest, like what's your interest rate, and also if there is maybe a repayment period, like a repayment grace period that we are offering as Kua Ventures, which I think would be ideal for us to just tackle that right now. So I don't know if Ms. Sarah, you want to take that?
Yeah, sure. So our interest rate in matters of straight debt is at 12% per annum on reducing value. So as you reduce your loan, or as you reduce your debt, you will pay less, right? So it's 12% per annum on reducing balance. But also to mention that part of the capital that we offer is not just structured as straight debt, but we also offer asset financing, convertible notes, and revenue share. So those four are our capital, how we structure our capital, or rather our capital instruments. Again, I repeat, it's straight debt, asset financing, convertible notes, and revenue share.
Thank you. Is there anything else you want to add to that, Peter?
Yeah, exactly. So we don't necessarily offer like a huge grace period. We do, our funding is we do align it to the business cycle. So depending on the type of business and how their customers pay the business, we try to align the type of investment and the repayment schedules to make sure that it's going to help the business to succeed and it's not going to cripple its growth. And that's why we do a lot of revenue share, so that it survives some of the business cycles that a business might face. But we do include grace periods for certain investments, whether it's like if it's buying a truck or if it's renovating a new shop. We do understand that, let's say, a new distribution center or a new shop will take time to fit out and to get customers, and so therefore we're not looking to get paid back from day one, because we know that whatever the funding has gone towards will take time to actually build the business so that they can service the investment. So we do align it to the funding cycles, to the type of business, the sector. Yet at the same time, we do, as an organization, like to see the repayments coming in regularly, so that we can then kind of deploy tranche, third tranche, as certain milestones are hit.
Thank you, Peter. Thank you for all those who are voting. Please continue voting so we can know how helpful this has been for you. I can see most of us are looking for funds to scale our businesses, which is really amazing. Yeah, so basically people are looking for funds to scale their businesses. So for those who are asking about where they can get the form, visit our website, https://kuaventures.org/funding/ that webpage, and you'll be able to apply.
there's a question here about collateral. So as Miseri said, we do ask for collateral. There is a certain percentage or allocation that we do consider unsecure as part of our loans. But of course, we try to balance our risk. So when we are looking at the business, the opportunity, what are the use of the funds for? And so there is a portion that we would do unsecured, but not the entire amount. So we are, if someone is coming looking for a loan, looking for asset finance, there's a portion that we are looking to be secured. At the same time, we try to be flexible to what we could consider as collateral. And so we try to be a lot more flexible to ensure that we're helping the businesses. And so we'll be a lot more flexible than, say, a more traditional bank or a more traditional lender. But at the same time, we are looking for a certain portion to be collateralized as well.
Thank you for that, Peter. That's a good clarification indeed. I don't know if Bisere, you have anything else you just want to clarify to everyone in regards to the application process?
Yeah, when you are applying, actually you will be able to like say, because I'm seeing a lot of questions people are asking, can I get the entire list and all those things? So just to clarify, we don't ask for all the things that I mentioned, all the documents that I was pointing out. When you're applying, basically all the documents that you need to upload are CR12 or Certificate of Incorporation, audited financials of at least 2 years, managed accounts, let's say from January to April of this year, and a pitch deck or a business plan, and the founder's ID and financial projections. So financial projections and let's say the business plan, they are not as urgent when you're doing the initial application. So when you go to the form, you will see the documents that you want to submit and others that probably we can ask for later. Right. And then the other bit that also I can clarify is that when you are applying, you can always save your application and come back to it later. So you realize, oh, I need to prepare this, or I need to think on how to answer a certain question. If you pause for a minute, the application or rather your document will still be there. You're able to save it and come back to it later.
All right. So any other questions you guys want to pop into the chat, and we'll be more than happy to, we can either answer it right now or even as we're going through the next session. I think we're going to transition in a minute to our next kind of 2 panelists. And so 2 good friends. And so Benson and Gibson, who will be kind of coming in. Okay.
Yeah, and Peter, I could add, like, when they visit the website, there's a FAQ part of it on our website. So even when you have more questions, we answer them. There are questions answered on the website. So if you're able to visit our website, you get to know more about Kua Ventures, see the entire team there, and a lot of your questions, I believe, will also be answered from there.
Yeah, exactly. That's great. And another reminder, one thing is to know that every investor is different. I know from everyone who's on the call, whatever seat you're sitting on, whether you're an entrepreneur, investor, an entrepreneur support organization, is one thing is just really to kind of look through the website and get to know each of the investors that you're talking to, because I know every investor can kind of look the same, but is very different. And so it's a key part of actually just getting to know the organization and what their expectations are. And then that'll sort of help sort of understand of what's best for you, what's best for your organization and your business, and what you're looking for as well. And so the FAQ exactly will be very helpful towards that. And so as well, but also encourage everyone to don't start the process too late. So especially for some of the people on the call that were talking about, or like their startups, or they're just getting started, or they registered 6 months ago, it's important to be joining these forums, asking these questions, and just, be gathering and kind of getting your house in order, getting the documents ready, even if you're not getting ready to apply for funding today. But it's just looking to kind of, as you build the systems and the processes and build your leadership team, kind of where's your end goal, where are you trying to get to? And so don't start the process too late, because I think from an investor's perspective, when a business comes to us and is looking for cash and they need it yesterday, because they've just got this huge order and they really want to kind of like, hey, I'm ready. This is such a great opportunity. Is also knowing that for a lot of funders, they, you know, we want to get to know the organization. We want to get to know you as an individual. And so we're not like, you know, other funders that can perhaps be able to operate a lot faster and a lot leaner. But that because we are looking for more of a long-term partnership with the businesses that we go through as well. So it's an important kind of part of making sure you're not starting the process too late so that you can kind of get your house in order. And so, but also making sure that you are building towards like what type of organization you're building as well. And so.
Yeah, and thank you, Ms. Sarah and Peter. Thank you for your insights and also just for coming through for us and making us understand the Kua Ventures process, investment process, and how one can effectively, efficiently apply to our call for applications. So thank you so much. Really, I'll go to the next session where I'll be inviting Benson and Gibson to the panel. Welcome to this call. And Benson, nice to see you.
Okay.
Finally, welcome to this call. So I'll just do a short introduction about you, and then we can go to the questions and also just tell us about what you do. So I'll start with Benson. Benson Wando is the founder and CEO of Soko Kijiji. If you love groceries and you are a green person who loves to eat vegetables, you probably have come across Soko Kijiji. So Soko Kijiji is an online grocery shop for fresh fruits and vegetables. It supplies in Nairobi and its environs. And the e-commerce platform sources fresh produce from a network of micro-enterprise fruits and vegetable vendors, locally known as Mama Mbogas. I think we can all just identify with Mama Mbogas. So it then packs and dispatches them to through motorcycles and riders to whoever makes the order. So Soko Kijiji enables the Kenyan urban population in Nairobi to conveniently place orders on its website, which is Soko Kijiji, and a mobile app, and an on-demand platform such as Uber Eats, Jumia Food, and customers can also arrange pickups from the strategic locations in the city. So this is just amazing, and it's really great to have you on this panel as you talk about your enterprise and your journey with Kua Ventures. I think this is really insightful for even the businesses who are present here and thinking about joining the Kua Ventures community and accessing the opportunities. You are the ideal person to speak to us about that. So my other panelist is Gibson Muriuki. And it's just amazing, like a disclaimer, just that I've worked with Gibson Muriuki previously, and meeting you here today is just really grateful because you are a wealth of information when it comes to investing and business growth. So it's really great to have you here. Gibson is the advisory partner for Feather Hub Africa. I'm sure he'll be going into depth to tell us what Feather Hub Africa does and who exactly is Gibson Muriuki. So I leave it at that so that we also have some time to interact with him and just understand what he does.
Okay, Pamela, thank you very much. And good afternoon, everyone. So my name is Benson Wando, as you heard, co-founder of Kijiji Groceries. And basically we digitize open air markets in Africa, and we work with a number of small scale traders, especially here in Nairobi currently. Yeah, so our journey with Kua Ventures has been very, very grateful and also interesting. One, I remember when I was getting started Kua Venture, we saw an advert and we applied, and we got the team coming here. That was Richard and Madalena, who came just to do a background check, understand our process. For us, I would say was quite straightforward. And the best thing is that for this business, for this kind of investment that we are working with, we had quite a number of options. Remember, we are a startup, so we had quite a number of options. But through the help of able to streamline us and get us the right investment for us, because what usually happens, I think what I've seen with Kua Ventures, it varies from business to business. So it's not one straight line. I've just tried to check some of the charts there, but it's not one straight line, but it's based on business. That's how our journey has been. So, and yeah, we are grateful for the fact that we have come with you guys. Yeah.
And Benson, thanks for that. But I'm just curious on what was the drive for you to approach Kua Ventures? Because I believe that many financial partners out there, but why Kua Ventures particularly?
Two things for us. Kua Ventures was aligned with our values in terms of us guys, we are Christian-based organizations, so they align with our values in terms of our faith. Secondly, we need someone who understands us from where when you're starting off the relationship, and understand where we wanted to go as well. So that was our drive as well. Of course, we were looking for finances to bridge a gap that we had in the business. So that was one of the leads. Secondly, also wanted someone that we share the same values, because remember, it's a relationship between an investor and a business. So that is what we were currently looking at ensuring that we get. So those are our main drives in terms of starting off with Kua Ventures.
Okay, thank you, Benson. And I think that's very interesting to even learn that. And this takes me to actually you, Gibson. You advise a lot of businesses on this front. So first of all, just tell us what you do and what your business is, so that we understand exactly how you work with entrepreneurs as well.
Yeah, thanks, Pamela, and good to see all of us. And good afternoon. My name is Gibson. Like Pamela mentioned, I'm an investment advisor or a transaction advisor. And basically what we do is basically de-risking companies. When I say de-risking companies, is basically supporting them to become more attractive to investor, and also become, very attractive in terms of capital, and also to decrease the level of exposure for external funding. Yeah, so in a nutshell, that's what we do. So we do end-to-end kind of support from deal initiation through pipeline, through the due diligence process, to negotiations of terms of investment to closing. So in a nutshell, that's what I do. Thank
you, Gibson. And just to put you on the spotlight, what should I, as a business, look for funding?
Thanks. Yeah, I think there are many reasons as to why people look for external funding. One of the most common or basic one is for growth. We have different stages of business. For example, real estate business, but then you're looking to grow. You have developed your business to some extent, but then you don't have the resource to take your business from level 1 to level 2. So most people raise capital actually externally to help them facilitate that process of accelerating their growth, by traction. And when you talk about traction, we mean achievements that you have you're able to build or to develop as a business. So most times people are looking for capital to actually build on their traction. And traction could be anything. It could be the same. You're also talking about revenues. You can talk about cost efficiencies, etc. So in a nutshell, most of the common reason as to why people raise money is for growth. Second one would be de-risking. If you think about a high-risk business, and of course, I can allude to that later when we are talking about probably the type of investments and stages of funding. But then some people are trying to lower the risk to actually attract more capital, and that's why you find that somebody will raise a smaller ticket initially, but then over time they also now structure a bigger ticket. So the smaller ticket will help them lower the level of risk that they initially had, and then they become attractive to follow-on investors.
Okay, thank you. And even from the poll that we just conducted earlier on, we noticed that most of the businesses present on this call, they're looking for funding to actually scale, which is really an interesting part. And Benson is here, who is an enterprise.
I would say yes, we have been able to achieve what you're expecting. Actually, I think we've exceeded it, because in terms of our revenue, we are looking at our revenues. We have tripled our revenue. We have doubled our staff currently that we have as well. And we have also been able to interact to attract other investors coming on board, courtesy of what we had. Let me say, like, for example, let's get on starting off with Kua Ventures, and I think Madalena and probably Peter as well, and Richard, who are helping us in the process. We didn't have a lot of documentation, so a number of things were just there. They were not actually put together, but with the help, especially of putting like the data room together, that has helped us attract other investors who have come on board to work with us. I remember, I think we had not also like registered the business fully as limited company. So with that, and you already have a very good structure for that. That was courtesy of putting the data room together. So that has helped us. So I would say, one, it has helped you, which have already tripled it. It has also helped our staff number that you have already doubled it. And secondly, it has helped us put systems in place that we are able now to I would say, we had more confidence level for us even to attract bigger tickets. But maybe just to say is for the businesses also, it's very keen for you to know exactly where you're looking the finances for. Because if you don't define the why, not for someone else to define it for you, not for a coach to tell you what you need for your business, you know what you need for your business. So it's that's very key. If you don't define that for yourself, you'll have all these coaches, you'll have all these people coming around you, and they might lose your. This is what you need for your business, but it's not what you need. And for you also, you need to know if I'm taking an investment, the bottom line should be increased revenue. So because this is a loan, so if it's not going to increase your revenue and help you tap into the low-lying fruits that will help you increase your revenue, for me, I think that's a red flag, and you might struggle along the way. Yeah.
Okay, thank you, Benson, for sharing that. And those are lessons for our entrepreneurs to learn. And that takes me back to you, Gibson. You advise businesses. Yeah. So how do we access this funding? Where do we source them? Or how are we supposed to find this kind of funding?
Yeah, thanks, Pamela. And maybe just to give a bit of a background on that, I think it's very important for entrepreneurs to understand their stage of business. And using Benson as a reference, I mean, he just said that through Kua Ventures investment, then that was able to catalyze other investors along the way. Now, there are different stages of investments that entrepreneurs would fall under. You know, you've probably seed, you have heard of Series A, Series B, all these are stages of investment. And even prior to that, there's what we refer to as bootstrapping, where you invest your own money. But then how do you access these investors? I think one of the most important exercises that you might want to conduct before you start even thinking of fundraising is understanding your financial need from an internal perspective. We talk about two things. We talk about the monthly cash burn. Monthly cash burn is the amount of money that you use month of month to run your business, be it paying salaries, be it facilitating your product in the market, be it other things, other costs associated to your business. Second, there's what we call runway. Runway is the duration or the length of time that funding that you're looking for is going to sustain your business. And how to compute that is basically you look at the ticket that you're raising, you divide by your monthly cash burn. Now, when it comes to fundraising, then you come in from that perspective of, for example, you're raising capital to facilitate your business for 2 years, that is 24 months. So then you're able to determine how much money you need. Also coming from a growth perspective, what growth you want to achieve within those 2 years, because then it means that at the end of the 24 months, then you might be going back to the drawing board and thinking of how much to raise next or in the subsequent round. So it's very important to actually understand your internal financial needs so then you can come up with a ticket. Normally, I advise businesses, if you're too early stage, don't structure a very big ticket, because then that is going to mess you up. You might have very little traction, but then you're looking for a very big figure. It might not make sense from a fundraising perspective. So you can probably have a big figure that you have structured, but then you stage it in terms of the tickets that you're raising from time to time. Second question, where do you get these investors? There's an exercise called investor mapping. Investor mapping means you're looking at various investors in the ecosystem, could be through, the ESOs, that is enterprise support organizations. It could be through ecosystem networks like transaction advisors or other referrals that you may have in the ecosystem. And once you have a bucket of investors, I think it's very important for you to understand what each of the investors funds. For example, if somebody has preference to debt investment or equity investment, there are all these other term safes, you could have convertible debts, etc. Another thing that you must consider would be what ticket sizes are they looking to invest in businesses. For example, it will be a waste of time for you to follow up on an investor who's looking to invest a minimum ticket of $1 million. You're looking for $100,000. So that investor mapping exercise is basically looking at different investors and seeing who would actually be better aligned to actually invest in your business that investor invest in. Yeah, so in a nutshell, I think that would be my response, Pamela. Thank you.
Thank you so much, Gibson, and those are great insights that you have given us. And this is an interesting question. What is the main challenge you have faced while fundraising? And Gibson is here to give you insights. So let us see what that challenge has been for you as a business.
Gibson, I'd be interested as you sit and professionally work with so many. You think the answer to that poll is based on, because you obviously sit on the other side as well, as you're on the team of the entrepreneur trying to help them succeed in raising capital. So
I can just see most of the businesses the process difficulties. Gibson, there's a lot of work for you here.
Yeah, I think one of the two key challenges I've seen in my experience of working with businesses is one, people not understanding what fundraising process entails. Where you find that you come in with the expectation that you're going to get a check tomorrow when you start the process today. And a lot of people get frustrated along the way because there is a lot of back and forth when you are, going through a due diligence process as an entrepreneur. There's a lot of back and forth when it comes to negotiations of terms. So that process, most times people get frustrated along the way, and at times even deals end up flopping. The second one would be actually documentation. And documentation speaks to a lot of things because documentation also speaks to your operation process. For example, if you think about an issue like governance, if you don't have proper operating documents or procedures, then you struggle with documentation. And so most times when investors are conducting their due diligence, you find that most of the entrepreneurs actually don't have most of the documents. And most times they may end up losing the transaction. I think the last one is that you should be honest during the transaction, be as real as possible with what the business is, where you are in terms of the stage of the business, and don't exaggerate things. I think most of the people lie, and then you end up being caught up by your lies during the due diligence process. And of course, nobody wants to invest in a business where they can see that. So to respond to that, Peter, I think I'll give those three responses. Thank you.
Okay, thank you. And Ms. Eri, you can attest to this, because now when you're doing your due diligence, maybe these are some of the areas that on the process that you meet along the way where entrepreneurs are not able to go to the next stage of funding. Benson, maybe for you, since you've been through the process, how was it for you?
Oh, thank you, Pamela. I think for us, it was quite interesting. I think one, documentation was it. Secondly, was a process of the whole process of putting it together, because remember, you're running your business the normal way you do. And there are all these jargons about investor onboarding or data room, or that sometimes you tend to be scared. But sometimes you have these documents in with you. It's only that you have not put them together. So that is one of the things that I realized, like as guys, we had some of the documents, it was just trying to align them. For example, of course, you have a PIN, you have a business registration certificate, you have your account somehow, you have also your bank statement and all that. So you have all those things that are there. So it's just a matter of putting them together. But what I would still insist is for one to understand where they are as first of all, understand where you are as a business, because you're inviting other people to your space. So if they don't find you ready, that means it might not work out so well. So understand first of all where you are. And I like what Gibson said. Be as honest. I mean, like, you have nothing to lose. So just be as honest and say, for example, this is where we are as a business. This is what we have. This is what we don't have. I remember during our due diligence part of it, like, we actually even made an Excel sheet with Madalena, and we just said, you know what, Madalena, I'll just highlight in green what we have and what we don't have. So, and then what we don't have, now we start having a conversation from there. So
Okay.
don't put pressure on yourself. Just be honest. If you don't have it, you don't have it. Don't fabricate it. Yeah.
Okay. Thank you.
Yeah.
Thank you, Benson. And I think you've just stolen some answers for us. So you've given us some answers. Thank you. And I hope as a business, you're taking notes. And to you, Gibson, are there some tips that you can share with the businesses?
I think top three would be one, being organized. And being organized, I'm referring to the documentation process. I think I found it very easy for businesses to go through the due diligence process faster. If you have, for example, a centralized data room where you put all your business, so it's legal, financial documents, etc. Actually having those documents in place is very key. So in the course of operations, I think it will be very important for you to have kind of a structured operations. You know, if you are going to be running the business, make sure, for example, you have a proper accountant who does proper books. You know, if there is any legal matters, make sure that you are handling these legal matters properly. There's business contracts or anything else. All these come to matter at the end when you are going through a due diligence process. That would be very key. Secondly, I think understanding your financial need would be very important. I think most of the people, you find somebody has revenues of 30,000 Kenyan shillings per month, then they're looking to raise $1 million. I think it's good to understand where your business is versus the need. And it's also good to understand what instruments you want to use in fundraising. When I talk about instrument, it could be debt, equity, and you need also to understand the consequence of each of the structure of fundraising that you're going to be using. For example, if you're thinking about debt investment, first think about your cash flows, because then eventually you're going to be servicing this debt is going to become a long-term obligation. Are you going to take up that money and actually grow your cash flows to an extent that you can sustain the business operations, at the same time sustain your obligation? If it's a case of, for example, equity investment, you need to think about what value you are worth, what is your valuation as a business, how is that going to affect their subsequent rounds if you're going to raise follow-on capital in equity. Yeah, so in a nutshell, I'll give that response in terms of insights for entrepreneurs. And of course, I think also having the ecosystem networks with the funders and other entrepreneurs also help, because there's where you get these contacts of and potential investors and potential opportunities to grow your business. Thank you.
Thank you, Gibson. Wow, this is interesting. So most of the businesses are actually interested, but still just almost at the same balance. We have some that do not qualify yet. I want to go back to Peter and Misere. Will this be a concern or to you guys? Because I can see like almost it's 47% who feel like they don't qualify yet. So what do you encourage these entrepreneurs to do? What would be?
Yeah, I can go first, Miss Ari, but yeah, I mean, this doesn't actually, it's not surprising at all, actually. I think one thing is to encourage everyone on the call that there's of the business, right? And certain stages of, there's a lot of businesses at different stages along the journey, okay? And most of the businesses are at the startup and very kind of the earlier. We kind of sit at the early stage growth stage, but not at the startup side. And so it's not surprising that exactly if you're on this call, it's like you're starting this journey, you're starting to build out your business model, you're getting more customers, you're building your team, and then you're looking for funding. And so I think hopefully what we've tried to resonate on the call today is a lot of that preparation and getting ready. And so I think great if you can refer other entrepreneurs or other people that you think might be interested or that might be at the stage that we're looking for. But even for you yourself, I think it's also a part of looking at the criteria, looking at what investors are looking for, even validating what you've heard today, and actually talk to other investors and see, are they different? What do they require investors and what they're looking for? But inside of that, it kind of sets you a goal, sets you a target of, as you're building your business, try to think through what are the different items that might need to be in place in order to proceed activities, because it does take a while finding the right investor. Not everyone gets funding as well. And so before you enter into that process, which can be, we talk to a lot of entrepreneurs that are very tired because they're trying to run and grow a startup or a new business, yet they're also on the side in the nights, on the weekends, trying to raise money to put the fuel in the car. And so I guess one thing is just to start the process early, but also make sure it's when's the right time for you to enter into the fundraising. But also, like Benson was saying, just be honest of where you are, put down the documents, and just start showing kind of what you have ready to go. So yeah.
Okay. Thank you, Peter. Ms. Ella, did you want to add anything to that?
Yeah, maybe I can just echo what Peter is saying, and just say that information is power. So the fact that you joined this session and realize, okay, I'm not yet ready for Kua Ventures, but now you know more about us, you know what you're looking for, and you know probably what are those 1, 2, 3 things that will disqualify you from applying right now. So you have that power, in matters of being informed. So you will go and work on your business, we keep echoing it here, like put your documentations together and make sure that even in the sector that you're in, what are the right documents that you need to be having in this place. And in matters of being compliant, are you compliant? It's just like doing a house check and putting your house together. And then probably you'll be ready for Kua Ventures in, God willing, one year. And let this not discourage you. Like you start meeting investors and they have all these criteria, and you get so scared of investment, you get so scared of reaching out to investors and talking to them. Having that information and knowing what is in the market and what is expected gives you the power to be able to work on ready to sit down and have these conversations with investors and not just about their actions.
Thank you, Ms. Stella. I'll start with you, Gibson. You can give us your parting shot and just let the businesses know or understand anything that you feel is of valuable to them.
Yeah, thanks, Pamela. I think my parting shot would be do what you call internal gaps analysis, understand your business from a risk perspective, because I think that is where most of the entrepreneurs run away from. Understand your weaknesses to build your strength perspective. I think then be very useful when you're fundraising, because then you're able to address them and actually mitigate them on time. Thank you.
Okay, thank you, Gibson. That was quick. So I'll go to you, Benson. I can talk to your fellow entrepreneurs.
I think for me, what I would say is that just understand your business. Know exactly what you want to achieve with your business. Understand your stage. Don't be in a rush. And I usually, most of my fellow entrepreneurs, you have to choose. Are you always running out to do fundraising, or are you doing the real business? So my show is, are you running a business, or are you always continue to do things? Because you can run and do the fundraising, you can have all the documents in place, but you don't have revenue that you're generating in your business. Again, puts you in a lot of problems. So understand your business, understand what exactly you want to do, and the funds that you're getting, you should use them to leverage and build your business. It's either a loan, it's either someone who has bought some stakes and shares in your business, which in either way you'll still have to pay at the end of the day. So just ask yourself those questions, and that will propel you to know that the bottom line of any business, according to me, it's revenue. So if you're not generating revenue, then you're not in business. Probably you're doing something else. Yeah.
Thank you, Benson. Thank you so much. Next we'll have Miss Sarah.
Great. Just to say that entrepreneurship is a calling. You know, not everyone is able to go out there and say, you know what, entrepreneurship journey, it's a calling. So you taking up, congratulations, right? So it's always trying to remember, why are you an entrepreneur in the past? Why are you doing what's this business, or why do you, what problems to solve communities for the people that, and for your customers, the people that you, so you have that clarity from the very start. And then when you seeking is know why. Why do you need that funding? From our experience, we've seen businesses that actually come to us, and when we start the journey with them, at the end of the day, themselves are the ones who tell us, Kua Ventures, I just realized I'm not ready for funding. I actually don't even need funding. I don't even know why I applied in the first place. You know, I need to give myself time, or I need to give my business time. Talk about strategies. You know, look at the strategies that you've put in place in your own business. How are those strategies working for you against you? You know, and go back again and revise all the strategies. So before you seek for funding, there are so many steps that one needs to evaluate or need to check in-house. You know, sit even with your team. Sometimes probably it's just a matter of operations. You probably just need to change the people that are working for you. There are a lot of things, and what I would say is get out there and get involved. You know, join such webinars, join platforms where investors, what is in the market, what are they offering, what do they want to see? You know, because investors are structured differently, right? They all have different funding criteria. What do they want to see at the end of the day? And also for you, before you even talk to any investor, understand who you are and what exactly you're trying to achieve. The other part is patience. Give the entire process patience. Probably you have this vision that will run for 100 years, you know, and you need to be patient on it. Sometimes even when we always think of a 5-year plan, probably you go back and you realize I need to start thinking of a 3-month plan, because probably you don't even have a 3-month plan yet, but you have a 5-year plan. Okay, so those are matters of strategy. So it's up to you as an entrepreneur, know that you're called. First and foremost, it's a calling. So congratulations, you always pat yourself on the back.
Thank you, Ms. Sarah. Really good advice. And finally, we'll have Peter.
Yeah, let me exactly just add, like, I think one thing Benson mentioned, which is critical, I mean, there's a lot of funding, a lot of grants available. There's, investors writing big checks for some of the huge businesses. But the fundraising process does take its toll, right? And so make sure you're ready. Make sure you're ready, and this is the right time in order to go. Because you don't hear all the stories of the businesses that spent 6 months and 12 months trying to raise funding. And so make sure you're focused. Make sure you focus your time on your customers, making sure that you're focused on building a business, solving a problem, creating value, but also making sure that cash is coming into the company as well. So a lot of businesses are able to succeed and grow organically if they have enough, if they've bootstrapped enough. Like like Gibson mentioned at the beginning of his sessions, like if you're able to bootstrap, and if you're able to get enough customers and make sure that you are just validating that your product or your service is working, then that is the key part of actually, as you enter into a fundraising. There's a lot of investors that will put money towards a business that is just solving a problem, right? It's even on the promise of what it could accomplish in the future. But they're not necessarily looking to just fund a short-term problem, right? They're trying to invest in you, but in the problem that you're trying to solve. So make sure you don't get stuck in that fundraising wheel, just chasing the external capital. Because like from an investor's perspective, we want to see that you're committed long term to solving the problem, to building the organization, and not just chasing that revenue target or the fundraising target. And so making sure that you're displaying your commitment and showing kind of what you've accomplished to date before you come to the investor is really important. Even the team that you were able to build, like it's of course, it's hard to recruit staff and to build commitment and loyalty inside your team, but showing that you're able to actually bring others along with you as you cast your vision, and as you look to build your business. You know, for us, we do look at who has this entrepreneur been able to bring alongside them. Do they have the talent? Do they have the commitment from a team to actually ensure that the entrepreneur can succeed? Because it's obviously extremely tough, especially in this environment over the last couple of years, to keep a business in operation, but then also to grow a business. And so
thank you so much, Peter. And going by the results of the last poll, maybe introduce an incubation forum for the enterprises that don't qualify currently. From the forum, they could be guided over time till they qualify. And I've seen so many people react to that. Is just something to think about, Peter.
Just an incubator. But there's a lot of great organizations that are providing that service, right? We have a lot of fantastic strategic partnerships, depending on, there's a lot of other players inside the ecosystem that help businesses to get ready to build their business model and put their systems in place. There's obviously a lot of other contractors and service providers and consultants that can really help an entrepreneur along their journey. So we work with a lot of great organizations to make sure that they are providing those services to help incubate and help businesses that are at that earlier stage, so that we can then be able to focus on what we're doing in investing in the businesses as well. And so, but I saw that comment earlier as well. It's a great point. And I think it's definitely make sure that you plug yourself into some of those communities, so that you can find more opportunities and partnerships.
Thank you, Peter. And just to everyone, we've shared our social media handles on the screen. Kindly follow our pages on Facebook, Twitter, Instagram, and LinkedIn for more information. Even as you grow your business, maybe you might not be qualified at this point, but maybe later here. So you can just have access to opportunities when they come up. So just make at our website and sign up for our newsletter, where we'll be sharing more news and updates for you as a business to be able to grow. At this point, if you have any questions that you feel need to be answered, please direct them to our email at info@kuaventures.org, and our team will be able to get back to you with the answers. If you've already started your application, we wish you all the best in it, and we'll be giving you feedback as soon as possible. This was a very insightful session. My name is Pamela Okutoi. I was your moderator, and I really appreciate you taking the time off your work to come join us sites and learn just as much as we have been able to learn. So thank you so much, guys. Do have a...
Thank you, Pamela. Thank you, everyone, for joining.
Yeah, likewise, Andy Gibson and Benson. Thanks for your time.
Yeah.
We appreciate it.